Welcome back, everybody. This is Carl from the Bull and Bear Report. I'm going to tell you today what's going on. 2017, massive inflation is coming to this world. It's already poking its head out. But are you prepared for this inflation? I'm not talking about owning gold and silver. I don't know what's going on with gold and silver. I've owned this since 2006, way back when it was in the 400s and so, and it skyrocketed, came back down, now settling down. The big money is not chasing gold. Now, gold is definitely an insurance hedge against currency collapse or the dollar losing its reserve status, but I wouldn't bank everything on it. Like 10% of your portfolio. I used to be 20. I'm scaling down a little bit because over the last year and a half or so, I've been scaling a little bit out of some of the gold and buying equities more because I see the equity and stock market as the main inflation the catch, where all the money is going to be. 2017, we have just begun this big push for inflation. 2016 was almost like a wash. Things were stagnant. The stock market was stagnant. The economy was stagnant. Business was stagnant. The Democrats were in charge, and it was going nowhere. Then the Republicans took over, and now all of a sudden we're seeing the trajectory starting. The mutual funds, the stocks, everything's starting to go up. Listen, bonds is the worst place to be. Warren Buffett said so himself. Why would you pick up a 5-cent nickel in front of a steamroller? That's what he said. That means you'll get crushed picking up a nickel. All right? He said, and even today in his last, they had the investors conference over there with him. He said, bonds is the worst thing. And I've read this over and over in different places too. Bond investing is the worst for long-term investors. There's just no money to be made. We don't want to gamble on, hey, the bonds might go up this year and we'll make 20%. No, we're not gambling on the equity rising in value like the principal of the bonds, like a bond fund or something like that. We don't want that headache. So, 2017, inflation, the stock market is not at the top, all right? We might get little pullbacks and corrections. You should welcome that as an opportunity to keep investing into it. That's what I've been doing. Every opportunity for the last 5 years, I've been investing since about after the crash, maybe 2011. I started to realize that this market is not going down. As soon as we crossed that 11,000 mark, I was like, no. And I did a lot of videos in the Bull and Bear Report, which I took down afterwards because they just got repetitive. Keep investing, keep buying, stay diversified. That's the key. Now, that's what we got to keep doing. Inflation is going to be monstrous. And how do I know inflation is going to be monstrous? Because if you look at all of the unfunded liabilities that are coming down the pike, we're talking about Medicare, Medicaid, Social Security, you name it, infrastructure spending that's required, the cost of the government, the military. We're talking trillions and trillions of dollars. Right now, we're at over $1 trillion in deficits. And we're not even probably talking about stuff that's under the table that they're pushing off till later. All right, this country, this government, and the world needs massive inflation. Now, is the middle class going to participate in this inflation? I don't know. Artificial intelligence companies are striving to eliminate as many jobs as possible to make themselves the most profitable. And guess what these companies are doing with the money? They're buying back their own stock, which is driving prices higher. That's decreasing the float of the companies. And then they're buying other companies completely outright because they want their business and their cash flow. So they're taking their billions that they have piled up in the banks and go, okay, I'm going to buy this company for $10 billion today. Boom, that stock is gone. 20% premium, 30% premium, gone. And I'm seeing it over and over and over. Boom, gone, buyout. Boom, gone, buyout. Billions, tens of billions, 20 billion, 10 billion, 5 billion, left and right. Billions. These are the small acquisitions. Now, even Warren Buffett, they were saying, might be looking at big ones, like we're talking 20 billion, 30 billion acquisition. But he doesn't know yet. He's like, I'm waiting for the right opportunity. He's waiting for maybe a pullback, but he's not seeing anything. And he's like, all right, well, when the opportunities come, we're doing bolt-on acquisitions now. Basically buying up little companies, spending money on increasing their businesses that generate cash flow on publicly traded companies. Okay, guys? So you see here, the big money is going into stocks and equities. That's why you have to be on board, but in a diversified way. Yes, pay down your debt. Dave Ramsey strategy. Save for retirement. Roth IRA, best first #1 investment to do. After that, if you have a small business SEP IRA, then you do your personal accounts as much as you can do. Once debt is paid down, no credit card debt, and just keep buying diversified equities. 2 top ETFs you could buy without even thinking about it. IVW S&P 500 Growth Fund. That's an ETF. IVW and DVY. Those are the 2 biggest ones I own in my portfolios. On top of Berkshire Hathaway, I own big positions in Alcoa because I think that industry has been beaten down. The materials, aluminum and stuff, and now they're doing all the car frames in aluminum. It's just starting to come back. Activist investors getting involved over there, and I've been holding for 2 years now. And I'm in the manufacturing business, so I know Alcoa and their business, and it is beaten down. So that is an inflation play in itself and an economic recovery play for businesses. So if the world population is going to continue to grow, the government needs massive inflation, you're going to see more companies earning more money, more buyouts, and the stock market's just going to keep elevating higher and higher and higher. All right? So just a word of advice, bigger inflation is coming. Dow what? We're at 21,000. How much higher can it go? How's Dow 30,000? Really? I don't know when, maybe 2 years, 3 years, whatever. Just average 20% return. This year, if the Republicans get their act together, we could see a 30% return year in the market. Could happen. We're already, IVW's up already 15, what is it, 15%? 10 or 15% this year. That's just an ETF. All right? My stock 5 portfolio is up already 20% this year, 19%, 18.99%. All right. If we have a great year where inflation, Republicans are like, okay, tax cuts guaranteed now. We're signing off on it. Boom. Little healthcare nibbling bit. Oh, we're going to correct the healthcare a little bit better. We see massive up moves. All the money hiding in the sides. A lot of hedge funds and mutual funds sitting on piles of cash, nervous that this is going to fail. We're going back it down. You listen to that. They're unprepared, underinvested, and they're going to lose their jobs if the market takes off, and they are way behind. You're going to see all of these hundreds of billions of dollars come flying back in from not only here, domestic, but overseas. Okay? So I want you to be prepared. I want you to stay diversified. And, I want everybody to make money, including me. I'm in this. All right? We're trying to get to that, retirement goal, financial freedom. That's what everybody wants here. Where you don't care if the company you're working for, if you have $1 million, $1.5 million in the bank, $2 million in investments, not just the bank cash. That's the worst thing right now because inflation and everything that's going on. Cash is like the worst. You keep your 6 months of spending in cash. The rest of it, you have to invest. Okay, guys? So eliminate your debts. Save and invest as much as you can possibly do because this is a once-in-a-lifetime event that we're going to see this massive inflation wave just wash over the world and equities and everything is just going to fly up. Middle class real estate, not so sure. I'm going to do a video just talking about that coming soon. Okay, guys? So if you got a lot of information out of this, please hit the like button, subscribe below, and I'm going to keep these videos coming about what's going on, the economy back again, inflation, and how we can invest right. And if you want access to the supercharged 5 stock portfolio, email me below and I'll send you some information on how that one generated 24% per year. Compounded, that's 45% per year. From 2009, if you had 100 grand, to today, May 25th, you'd have $505,000. But that's if you have more capital and you can diversify. Because I always stress diversification first, no debt, and saving. And then once you have a certain amount of capital, you can diversify into different strategies. But ETFs is #1, the simple way to go to catch this inflation wave. IVW, DVY, Berkshire Hathaway, 3 companies that must be like the cores of your portfolio. Okay? Super simple. From there, let it grow, keep investing every month, and then check back, and then you can do different strategies once you get to larger numbers. Okay? Have a great week, everybody, and I'll see you in the next video. Subscribe so you get the next updates. I'll take care. Bye-bye.